Hey people, I welcome you all to Caroline's Online Academy. What we're doing in this series is we're doing small concept numericals to help us develop the knowledge to solve the big accounting for share capital problems and an understanding accounting for the share capital chapter. All right, so in the previous video, what we saw was we learned about calls and arrears and how to account for calls and arrears when more than one shareholder defaults payment on the calls made due by the company. In this video, we're going to be looking at something else that is called as calls in advance. Calls in advance means if some shareholder, instead of paying the money in installments, like paying a certain amount in application, saying paying a certain amount in allotment, and then certain amount in first call and certain amount in second call, decides to pay the entire amount due along with a certain call because he feels that he might default or he finds that he thinks that it is easier to pay the entire amount due, so he doesn't have to keep track of when the company is making a certain amount due or so. The additional amount paid by the shareholder, which is not yet due, which is not yet being called up by the company, is called as the calls that have been paid in advance and will go to an account called calls in advance account. In this video, we're going to look at how to account for calls in advance when some shareholder pays in advance the amount due, not amount which is not yet due from him. All right. So as usual, I have a small problem for you to help us understand that. Let me read it out for you. Right. Yeah. So here we have Jiva Tea Limited issued 1 lakh shares of rupees 100 each payable as follows. We have application 25, allotment 30, first call 30, and second call, the remaining amount will be made due. The company received 1 lakh applications and allotted in full. One shareholder, Karthi, holding 1,000 shares, paid the remaining amount due on his shares along with allotment money, past necessary journal entries. So this particular person, Karthi, has paid the remaining amount due on his shares along with first call money. That is to say, whatever was due on first call, he has paid. On top of that, what will be due in the next call also, he has paid. So second call money, he has paid in advance when he paid the first call money itself for whatever reason he pays that. Understood? Before we start solving the problem, as usual, let's try and find out how much the second call money is. The issue price of the share is 100 and the company has received 25 on application and is making due 30 on allotment and 30 on first call. So the amount that has to be made due on second call is 15 rupees. Understood, my dear children? And Karthi has paid the amount in advance along with not first call, along with allotment money, right? So till the time we receive allotment money, everything else has been going on smooth. Only when allotment money was paid by the shareholders, one of the shareholders, that is Karthi holding 1,000 shares, decided, okay, fine, let me pay the entire amount due along with allotment itself. So he's paying the first call money and second call money along with the allotment money itself. Let's see how to account for that. There is no change in the first journal entry. It is bank account debit to equity share application account. And the amount would be number of applications received multiplied by the amount receivable per share as application money. So that would be 1 lakh is the number of applications received, 25 rupees is receivable per share as application money. So the total is 25 lakhs. Application received. All right. Second journal entry would be, in case you had rejected any applications, you've got to refund the money on the rejected applications. In this case, we have not rejected any applications, so we'll go ahead with the allotment. The company had allotted in full, which means it had allotted shares to all the applicants. And hence, we got to first transfer the application money received to share capital account. As we have allotted and nobody paid in excess, the entire amount would be transferred to share capital account. Shares. All right. And then we would make the allotment money due, as there is no abnormal situation here also. We'll make the allotment money due on the number of shares allotted multiplied by the amount due per share as allotment money. And the journal entry would be equity share allotment account debit to equity share capital. Allotment money made. So that is how much, my dear children. From the problem we understand allotment money is 30 per share, right? So that will be 1 lakh into 30. So that will be 30 lakhs. All right. Then now we got to receive the allotment money. This Karthik couldn't, just do the normal thing like all the other shareholders. What he did, what did he do? He paid the remaining amount due on his shares along with the allotment money itself. So he paid the allotment money. On top of that, he also paid the remaining amount. Okay, making it a big headache for us. All right. So what do we do now? We receive the money, bank account debit to equity share allotment account, because that asset is reducing. It is against that right to receive money that we are receiving the money. So that asset is reducing. That will be credited. And on top of that, Karthi paid money in advance, right? The first call money, second call money that he has to pay in the future. He paid along with allotment money itself, right? So what do we have to do there? If someone pays money to us in advance, before the amount is actually due, it is a liability for us, because we either have to pay the money back or set it off against, whenever the money is due from that person, we have to set off this amount that we have received from that person against that amount that is due from them. All right. But at this point of time, nothing is due from them, but they have paid the money to us, and therefore that is a liability for us. And when liability increases, you have to credit it. And this liability will be credited to an account called calls in advance. Calls in advance. Now we know that equity share allotment will be credited by the full 30 lakhs that we made due, and calls in advance is the advance money that Karthi paid, right? Now, how much would Karthi have paid in advance? He paid the remaining amount due along with allotment money, right? So the remaining amount due would be the first call money and the second call money. First call is 30 rupees and second call is 15 rupees. So per share, 45 is the remaining amount due after allotment. That 45 is the amount that Karthi paid in advance. Understood, my dear children? So Karthi paid 45 rupees per share in advance, and Karthi is holding 1000 shares. So the calls in advance would be 1000 shares multiplied by 45. Let me repeat, how did we get the 45? Karthi, along with allotment money, paid the remaining amount due on his shares. So after allotment money, how much is due on one share? First call is due and second call is due. First call is 30 rupees and second call is 15 rupees as we have calculated. So the total amount of money due on one share after allotment is 45 rupees. Am I right? Karthi is holding 1000 shares. He paid the remaining amount due on his shares along with allotment money. So he would have paid that 45 rupees extra per share. So on 1000 shares, you would have paid 45,000 rupees. So that will be credited to calls in advance account. So how much will be debited to bank account? The company received all the amount due on allotment. So that is 30 lakhs plus whatever Karthi paid in advance. That is 45,000. So the company would have received 30 lakh 45,000. 30 lakh 45,000. Allotment money. Next thing for us to do would be to make the first call due. Again, though someone is paid in advance, when we are making due, we'll make the full amount due on the first call. So equity share first call account debit to equity share capital account. And that would be how much, my dear children? First call will be made due on all the shares. So in all, we have 1 lakh shares, and first call is 30 rupees per share. So that will be 30 lakhs. 30 lakhs. Share first call money. Okay, now that we made the first call, due, right? The next thing to do would be to receive the first call money. Will we receive 30 lakh rupees here? Just think and tell me. We wouldn't. Am I right? Because Karthi has already paid the amount due on his shares. 45,000 he paid well ahead of time. Am I right, my dear children? So Karthi would tell, hey, why are you making first call due for me? I already paid the 45,000. No, take from that and set it off against this. Understood? So we would not receive the entire amount. So bank account will be debited as usual. And that advance, the calls in advance we created here for Karthi, out of this, the amount corresponding to first call is not advance anymore because it has become due. Am I right or not, my dear children? So we have to reduce that calls in advance account. I told you calls in advance is a liability, right? So we are reducing liability, and therefore when liability reduces, it will be debited. So calls in advance account debit to equity share first call account. Equity share first call will be credited with the full amount that we made due. Calls in advance will be debited with what amount? With 45,000, is it? No, that would be wrong. If you wrote 45,000 here, it would be wrong. Because the 45,000 rupees includes 30,000 of first call and 15,000 of second call. 30 rupees in first call and 15 rupees in second call. Am I right? So Karthi will set off only the first call amount due with this in this when you are receiving first call money. He held 1,000 shares. He holds 1,000 shares, and 30 rupees per share is what he is supposed to pay in first call, and the amount that would be set off is 30,000 only. The remaining 50,000, 15,000 will remain in calls in advance account because that has not become due. That will become due only when we make the second call due. Am I right, my dear children? So that is 30,000. And so the total amount of money received by us would be 29,70,000 because only the other shareholders will pay. Karti's amount, we will not receive it. We'll set it off against what we had received in the first call. So equity share first call money. And now what we will do is we will make this share second call due, equity share second call account debit to equity share capital account. We'll make it due for the entire amount. Mind you, I already told you, even if there was advance or arrears or whatever be it, we'll always make the amount due on installments for the full amount. Equity share second call made due. And how much would be the amount that we make due? It would be the number of shares allotted into second call money per share. Okay, so second call money per share was, we calculated it to be 15 rupees, and number of shares held by all the shareholders is 15. So we'll make that due. And as usual, we will not receive the entire amount of money because Karthi, our friend, has already paid that amount in advance, and for Karthi share, it will be set off against the advance paid. So 15 rupees per share of Karthi will be set off, and of 14,85,000 is what we will receive. And equity share second call will be credited with 15 lakh rupees, the full amount that we made due, and remaining shareholders would pay their money, and that will be 14,85,000. I hope you understood this. In case you haven't understood it, please leave a comment in the comment section. We'll also be call money and second call money. First call money was 30 rupees, second call money was 15 rupees, so totally 45 rupees. So that multiplied with the number of shares held by him is the money that he paid in advance. That will be 45,000. We credited it to calls in advance as it is a liability account. We are not supposed to receive that money by at this point, but he has paid that money to us, so it is actually advance for us. And then what did we do? Whenever that amount became due, whatever portion of that amount became due, we set it off against when we received the amount due. For instance, we made first call due for 30 rupees per share. So when we receive first call money, we set off that out of that 45,000, we set off whatever Karthi had to pay for the first call because that is not it due, and that amount is that amount is will not be paid by Karthi. He would tell us to set it off against the advance that he paid to us along with allotment money. And out of the 45,000, 30,000 is due from Karthi now. So we'll reduce the calls in advance account and set it off against the first call money due. That calls in advance account will be debited because the liability calls in advance is liability when it was created, and now it is reducing as we are setting it off against the amount due, and so that will be debited here. And then again, we made second call due for all the shareholders, and we'll set off the remaining amount due from Karthi along with second call. And with that, we've come to the end of this video. As this is a YouTube video, kindly share, subscribe, and if you have any comments, please leave it in the comment section. A word of encouragement will also be great. It'll push me to make more content like this. And if you're disappointed, kindly do leave your feedback. Please let it be constructive, or that will be helpful for me. Thank you so much. We will take care and have fun.